Hello and welcome to the Future of Day Trading Remastered for 2022. In this lesson, we'll be discussing hard closing. Okay, now that we know the effect of time, let's talk about one of our first advanced topics, the hard close. Now, the hard close is when you have a level on your chart and you close over top of it in order to confirm that a level is breaking or a trend is breaking. And there's a general misconception out there regarding hard closing an actual move. So the term hard close means that, again, you've broken the level of the trend. And people will often say, well, the wick went over the level. So in this case, we have red marked for daily levels and we have yellow marked for 4 hour. I always color code my information so I know exactly what I'm looking at no matter what time frame I'm on. So red is the daily, just like right here, we have a daily level and a daily trend, and yellow would be the 4 hour. So when we have something like this, where you see the wick of a candle going over top of this red level, you would say, oh, it's hard closing. This would be incorrect. It's not the wick. And then other people would say, hey, it's the body of the candle that is hard closing. So in a scenario like this, where this first beige and this blue candle go over top of this level, they would say it's hard closing as well. Well, this would be incorrect as well. Actually, the proper way to hard close anything on the charts is, guess what? Our friend, the effect of time. And the effect of time shows us that it's the bottom side of any candle that has to actually hard close a move. And the reason we would use the bottom side of a candle is because a bottom side of the candle confirms all the time frames underneath it. So if the bottom side of a candle on a 4 hour time frame, like right here, if this level was, say, for instance, maybe right here, you could see the bottom of this accumulation candle would be confirming that it's a hard close because all time frames underneath it would be confirmed to be broken as well. And then if you were to move up to the daily, it could actually confirm the 4 hour, and the 4 hour could confirm everything down below it. And again, it can never confirm up in time frames, but it can confirm everything below it. So in a scenario like this, where you're breaking up into accumulation, you would actually need the bottom side of an accumulation candle to close over top of your level or trend to confirm that it has hard closed in order to do things like change your levels, array your trends. If you don't have the bottom of a beige or green candle, green if you're using default colors, if you don't have the bottom side of that accumulation candle, and the accumulation's bottom side is here, and a distribution candle, because it's going down, the bottom side of a distribution candle would actually be on the opposite side. As the motion of the candle or the movement would be going down, the top would be the actual top of the move, and the bottom would be the bottom side of that candle. So the bottom side of a candle doesn't literally mean whichever is the lowest on the chart. It actually means when you're in accumulation and you're moving up over top of a level, while the bottom side of a candle would indeed be that bottom side right here. So that bottom side of this candle here, or let's zoom in to make this a little clearer for people so there's absolutely no confusion. If you were to break this level here, you would need to close this candle here or this candle here. These ones wouldn't do it because when you are moving in accumulation, it must be an accumulation candle of that time frame to actually hard close that move. So if that were the case here, then we can simply adjust this level to the exact moment for an example purpose here, to where that would be actually confirming a hard close. So right here would confirm this one would not be confirmed. And right here, this would confirm that as well. So these two blue candles actually make no difference whatsoever when you're talking about hard closing in accumulation. Now, if you're on the other side of the chart, the exact same would be true about distribution. If you had a distribution candle like, say, this one right here. Let's put our magnet tool back on so we can get our exact pinpoint moment. Let's use the replayer tool to go down. None of these candles could actually confirm that this move was breaking. You see how these are accumulation candles down here? Well, it actually can't be an accumulation candle. It would actually have to be a distribution candle. And this distribution candle, the bottom side of the candle, because it is moving down, if you were to flip your chart, it would look the same thing as an accumulation candle. Therefore, meaning the bottom side would actually be this right here. So you could say that, oh my God, this is hard close breaking because the bottom side of the candle is going and closing under trend, and you'd be completely wrong. It is the fact that both sides of the body of the candle have to be closing. Therefore, when you're in accumulation like this guy right here, the bottom side here would indeed close both sides of the body. And in distribution, well, only this side of the distribution candle can close both sides of the body as well. So when we are referencing the bottom side of a candle, what we are talking about is its ability to be the bottom side of a distribution or accumulation candle. So as we move forward in this move, you would say, oh, and if you had mistakenly done this, you'd be like, oh, this move is breaking up still or down until it actually has the candle broken on the bottom side. And it never actually gets that candle broken on the bottom side. And you can see that it actually holds its level and moves up and through into the next move. And you could actually even probably go lower in time frames here and find an even deeper part of this move right here, which would be the hourly level, which is exactly what you would hit right here. And you'd get the perfect bounce off your hourly level, which would have been preset by this one right here. So this hourly level had held it first, and then this hourly level had held it. And then you would simply be moving to here. And we can just go forward in time frames and see exactly when this thing hard closes. Hasn't done it yet. So we need to be aware of this. Is something very important. You see how most people would have mistakenly marked this to say, hey, we're hard closing the move. We're actually not hard closing the move because it would have to be the bottom side of a distribution candle in order to hard close this. Now, we're still not breaking the move yet. Still not yet. Not yet. It's hanging on. Still hanging on. There's no bottom side break. And there it is right there. So now you have broken your level here and you are moving down to a deeper level in the chart right here. So now that you've broken your level, you're likely going to move down in the chart. And you'd also want to go to the 4-hour candle here and make sure that you have the 4-hour mark too. And you actually, in this moment, broke this 4-hour candle because this 4-hour level, because the bottom side of this candle has actually hard closed. So I'm assuming now that this is just going to break straight down, which it does, which is perfect result for the action of the hard close. So this is critical information moving forward on levels and trends. So we've looked at an example with levels, and then we could simply just repeat this process over, mark this level here. And if this one holds without hard closing, it's likely going to move up. And it does. So you have been given the perfect set of information to understand what a hard close means on a level. Now let's talk about a trend. It's going to be the exact same rules, and you're going to be able to use this to help you see when trends are actually breaking versus rejecting. The difference between, hey, is this trend just wicking through its trend and moving down? And you're going to go to time frames and see lots of moments where you have stuff like this. And we may move down still on Bitcoin today because we haven't closed or hard closed yet in accumulation, assuming that the price floats here all day and the bottom side of this candle right here stays beige and you don't actually make it a blue candle, then you're actually hard closing this daily trend and moving up to attack a larger range. So let's talk about trends. Now, in this scenario, we don't have a ton of information to use because we're quite localized to the move. So what we're going to do is we're going to build some trend architecture. We're going to take the accumulation to accumulation points right here. And we're going to start building out our global, local, and legacy trends. So we know that we have that 4-hour mark. And by doing this, you could see that that exact thing happened here that we just talked about, where you quite haven't broken a trend yet. But if you were to go back to the daily here, it might look, or even a 4-hour chart, it might look like you were breaking this in this moment. It might look like, hey, we're breaking this trend. But indeed, you actually aren't breaking it because there is no hard close. There's no bottom side of a white candle moving over top of trend. So you get a lot of scenarios where people are trying to buy a trend breakout or play some type of big move up when they simply don't understand how a hard close actually works. And then you have this candle move down. So imagine all the people that thought the trend was breaking here, and you can move down into time frames and down, and you would see like, hey, look at this, we're hard closing and moving through, and the same thing happened here, and people would have been buying only to lose money. And the same thing happens here, and it looks like the trend is breaking, and people are buying only to lose money. And quite simply, we weren't hard closing the relevant time frames. We've created this on a daily, so we need to create a pretty large break. Maybe an hourly or a 4-hour chart here has to actually hard close this move. And then you could go down and create even further hard closing criteria. Now we've created this on the 4-hour, so let's adjust this to a 4-hour time frame. Okay, well, great. That's amazing. We have that there, and it's the biggest time frame we have, so it's what we're going to use. So let's go to the 1 hour and see where we can maybe hard close the 1 hour trend here to actually go and break this move up. So when you get the bottom side of that candle close, assumingly you're going to have a pretty good size move to this trend. And if that trend breaks, you're going to have the continuous attack of next trends. What hasn't happened yet, it's probably starting to happen on smaller time frames. Right here it does. So it needs to kind of hold its level, which would be somewhere in there. We're not going to worry about the level. We're just going to talk about trends. And you would need to kind of hard close this in order to have that move up. And there it is right there, the hard close. So you're hard closing the trend now. And assumingly you're going to move up in a pretty quick manner here. Yep, you move straight up to this trend. And once you've broken this trend here, you're now hard closing the next trend or attempting to on the higher time frame, which is just a bigger piece of information. And again, you get to that same scenario where the breakout is possibly happening. You aren't hard closing the trend yet, but if you were to go to lower time frames, you can start to see the smaller breaking moments. So you would keep going and hey, look at that. We just hard closed a 15. and it's 1530. And if you move one more candle, it's 1545. So at 1545, if we were to close one more candle here, we'd be at the 1600 mark, which would open a new hourly candle and possibly even a new 4-hour candle. I'm not sure if that opens a new 4-hour candle. 12, 16. So in 15 minutes, you actually have what could possibly break up and through this move. So you've broken the lower time frame, move one candle forward. You have now created, well, you're not quite there yet. Is it 1600? It's 1600. You're not quite there yet. And you see how it's still kind of struggling to get over and it's not quite ready to move up. There's the candle, there's the accumulation, and you're going to assume now that this is going to break up. And there it is. Bang, like magic. It breaks up because it breaks the relevant part of the move, which is also creating the next 4-hour candle. And you have the hard close and the effective time now working together to show you pinpoint accuracy with perfect information that gives you the exact spots where you should be buying. The hard close is no joke. When it's misunderstood, you have completely inaccurate readings. And when people don't use the bottom side of the candle, and for the simple fact that the bottom side of the candle represents all time frames underneath it, as we saw in this video. So when you hard close the bottom side of a larger candle, you're actually breaking the smaller moments of it. And then 15-minute leading up to the hour, leading up to the 4-hour, which can then create a hierarchy or a motion that will give you the needs to break through an actual trend or a level. So with the effective time combined with properly hard closing, you are now starting to build your toolkit for extreme accuracy because you're actually marking trends correctly, accumulation to accumulation on the top side, working time frame down, distribution to distribution on the bottom side. And now you know exactly when you're supposed to adapt those moments out. We can never move up in time, so we can't move that way, but we could move down in time or use the same time frame we're on to adjust these trends and array them out, adjust these levels, make them more accurate, and get to the exact moments where you're going to see something that's breaking out. Because we understand the theory of time and how important it is in our charts, the way in which time works and how it decycles information and the amount of time it needs to actually create these moments with the hard close on the bottom sides of candles. And again, just to repeat this like a broken record, so it sticks in people's brains, the bottom side of a candle on a distribution candle would be the top side of the body for the simple fact that it is moving down. So if it is moving down, the top side of the candle would be the downwards movement. So the bottom side of that distribution candle would actually be the top of the candle itself up there. And opposite, when you're in accumulation, the bottom side of an upwards movement would be the bottom of accumulation. So the bottom of an accumulation candle, the top of a distribution candle, these are the hard close time frames. And you can just simply hit play there. You see trend gets hit, it goes after, and you're probably going to have some of movement here with Bitcoin trying to break its next trend and looking for the attempt of a hard close on larger time frames moving up. The 4 hours confirmed, and we're going to see if this daily confirms on Bitcoin today. So there's hard closes. I hope you enjoyed the lesson. This was a huge one and a core piece to your understanding moving forward. We'll see you on the next one.